Good day, ladies and gentlemen. And today you are with welcome to TINHLAYO-ORGANISATION. And today we will be doing accounting, graduate of accounting. And our question here, just because I didn't screenshot the question and put it here, or I didn't crop the question and put it here, they said prepare the statement of balance sheet for the year ended on 2025 February. Do you get me? Since we know that our year end on 2025 February, we must go and do what and make a timeline. So this our timeline. Our timeline start on 1 March 2024 and end on 28 February 2025. Do you get me? So let's go and answer the question. They say what? Balance and totals on 28 February 2025. These are the balance and total for the end of our financial year 2025. This is at the beginning of our financial year 2024. Do you get me? So here, let's go and look at our answer book and see whether there are something missing or not. Okay, we're gonna start here. Assets, non-current assets. Under non-current assets, we have fixed asset and fixed deposit. Do you get me? Here on fixed assets, where it requires it is the space where you're gonna put what your carrying value on your land and building, vehicles and equipment. Do you get me? Here on fixed deposit is where you're gonna put what the money that you invested, or the money that the deposit that it is on bank and it will mature over 12 months. Not be it will mature over 12 months. You see, not within a year, more than a year. It will stay more than a year. Don't mind my English as long as you understand. So here on current assets, we have what? We have inventory. We're gonna write what? Inventory here. Inventory. And then we have trade and other receivable. Other receivable. We have cash and cash equivalent. Do you get me? The money that will in cash and cash equivalent where you have petty cash, what, but since it is blank, we don't won't do it today because there is a blank space. Do you get me? So here we have shareholders equity. A shareholders equity, they have provided the figures for us where we have what ordinary share capital and retained income. Do you get me? So we have non-current liability. Under non-current liability, we all know that on grade 12, we have what? Long-term loan. It's a long-term loan or long-term borrowing. Do you get me? So here we come. We have what? Current liabilities. Current liabilities, we have trade and other payables. We also have what? Since we have long-term loan, we're gonna have a what? Also a what? A short-term loan. A short-term loan. Short-term loan. Do you get me? Or a current portion of long-term borrowing. Yeah, you can call it a current portion of long-term borrowing or a short-term loan. And then we also have what? SARS, income tax. Do you get me? So under we also have what? We also have shareholders for dividends and bank overdraft. We're gonna say share here. We're gonna write what? Shareholders for dividends. Dividends. Yeah, and then here we're gonna have what? Your bank overdraft. Do you get me? So now we have filled the missing space. So let's go and to our trial balance. Yeah, let's go to our trial balance. Let's read the trial balance from here, from the top to the bottom. Do you get me? We have ordinary share capital. Ordinary share capital affect what? Statement of financial position. Yeah, statement of financial position is a balance sheet. Do you get me? And then retained income affect what? Statement of financial position. Do you get me? And then since they've provided this amount for us, yeah, we're Go down. We have King Bank is a loan. This affect our what? Statement of financial position. It also affect the statement of financial position. Do you get me? So, but they didn't provide the amount for us here. It means that there is an adjustment that will tell us what to do. Do you get me? And then we have SARS income tax. SARS income tax, since it is credit, it means that it is pay. It it falls under what? Under the current liabilities because it is credit. We know that on credit we have credit, we have debit. Do you get me? Since it is credit, the SARS income tax, it is credit, we're gonna come and record it here. This 200. We're gonna come and record it here. Sorry. 200. We're gonna come and put it here. Excuse me. We're gonna put it where there is what? Where there is SARS income tax, we're gonna say 200. Do you get me? I hope you all understand. So let's go above. We are recording it there because it is payable to SARS. We are owing SARS that month, this amount. That's why they recorded credit. We are still owing SARS this amount, 200. That's why they recorded it credit. If it was debit, it means that SARS will be owing us. We are going to record it under what? Under trade and other receivable. Do you get me? So since it is credit, it means that we do what? We owe SARS 200. So creditors control, they provided this figure for us, and creditors control fall under what? It fall under statement of financial position, where in what? Trade and other payables. Do you get me? So we have shareholders for dividends. For 2025, they didn't provide it for us. It means that there is an adjustment, and shareholders for dividends fall under what? Current liabilities. Do you get me? So we have debtors control of 382,700. They provided it for us on our answer book. It fall under what? Trade and other what? Other receivables. And then we have what? Provision for bad debt. Provision for bad debt. They put in question mark, but we know that provision for bad debt must go and subtract it on what? On debtors control. Must take our debtors control and subtract the what? The provision for bad debt, and we get the net trade debt. Do you get me? So this also fall under what? Let me do this. Fall under statement of financial position. Do you get me? And trading stock. This is the trading stock that we were willing to have, or our trial balance says, yeah, we're willing to have 920,000. So let's go and record it under inventory. If there's an adjustment, we're gonna adjust it. 920. That's how I prepare this. 920,000 for inventory. So here we go. Creditors for salary. Creditors for salary will go and record it under what? Under the trade and what? And other payable. Why are we recording it under the trade and other payable? It's a creditors. We know what a creditor is. A creditor. Look here, we have creditors control. Here we have creditors for salary. And creditors control, we recorded it under what? Trade and other payables. And then creditors for salary, it means that we still have to pay this amount of 24,750. Let's go and record it. 24,750. We still have to pay it. Let's go and record it. 24,750 under trade and other payable. When I say plus 24,750 trade and other payable. Here's trade and other payable. We're gonna say plus 24,750. Do you get me? So let's go. Here we come. We have recorded it. Okay. We have what? Our bank unfavorable. It is we have our bank. It is unfavorable as on 24 February 2025. At the end of our financial year, our bank was unfavorable. It means that it's a what? It's a bank overdraft. It's a bank overdraft. We're gonna record it under bank overdraft. 100 900 100 900. Let's go and record it on bank overdraft. 100 900 we owe this amount to bank overdraft. We're gonna say what? 100. Let me record it here. 100 900. Do you get me? We are still recording. Do you get me, guys? I hope you understand. Okay. Then we have our sales. It doesn't affect our statement of financial position. Our cost of sales doesn't affect our statement of financial position. Salaries and wages, maybe there is an adjustment we don't know. Audit fees, maybe there is an adjustment for that we don't know. Bank bad debt recovery, maybe bad debt recovery. It doesn't affect our statement of financial position at all. Directors fees, maybe there is an adjustment we don't know. Rent income, maybe there is an adjustment we don't know. Stationery, we know that stationery falls under what? Under inventory. Do you see? But we put the stationery under inventory if we open with 17,000 of stationery, and then at the end of the year we find that our or during the year we use how much, or we use 14,000 stationery. The difference we're gonna put it on what? Under inventory, and it will be what? 17,000 minus 14,000. So it's 14,000. It will be what? It will be 3,000. We're gonna put this 3,000 under inventory. Do you get me? So yeah, dividends on ordinary share. Okay. Now they say note the bank balance is given on 24 February 2025. They are referring to this bank, which we say is bank overdraft. There were transactions conducted after 24 February. There were transactions that were conducted after we closed our books, you see, for that financial year. So we have to still record it. Then they say extract from what? From the cash flow statement for the year ended on 28 February. For the year ended on 28 February, we have a what? Depreciation. This affects the statement of profit or loss. And then we have income tax paid. This, it doesn't affect our statement of financial position. Interest paid, which doesn't affect our financial position. And then we have fixed deposit matured 55 100. This is the fixed deposit. Maybe we have a fixed deposit of how much on the bank? Of 7,000. Do you get me? It's an example. If we have a fixed deposit of 7,000, then we say next year we're gonna do what? We're gonna need 3,000. We're gonna need 3,000 on this amount. Do you get me? This is the fixed deposit. Fixed deposit, long-term fixed deposit. This is the what? The fixed deposit matured. Fixed deposit matured. This fixed deposit matured, we're gonna take it and put it where? On our bank. Why are we putting it on our bank? Because this is our money, it is on the bank, but we won't use it right now. Do you get me? We won't use it right now just because English. We won't use it right now at the moment. So in order for us to use it or to have it on our bank, so that we can able to use it, we must go to the bank and inform the bank that we need this amount, you see. And then they will give you your 3,000. Your 3,000 will go and record it on bank. So let's go and record this 55 100. 55 100. We wanna come and record it here under bank overdraft. We were owing bank how much? 1,900, ne? And then since we'll have a fixed deposit that will mature, you see, this fixed deposit, it is going to to decrease the amount that we were owing the bank. And then it is 5,000. This 5,000 what? It was 5,100. Do you get me? It is reducing the amount that we were owing the bank. You see, it is reducing our liability. Yeah. Do you get me, guys? I don't know whether you understand, but as time goes on, I hope you will understand. So, okay. Then they say fixed, okay, sure, fixed deposit, March 128. Yeah. Now let's go to our adjustment. Only half, okay, adjustment. Additional information. It means that, yeah, it is an additional information. Only half of the audit fees were paid. The balance will be paid on March 2025. They say only half of the audit fees were paid. The remaining amount will pay it on what? On March 2025. Do you get me? So it is that it says that it means it means that this amount, since we are going to pay it on what? On March 2025, we're gonna go and record the amount under what? Under trade and other payable. We still have to pay it. Do you get me? So let's go to our audit fees. Our audit fees, they say our audit fees is how much? Audit fees is this 45,000. Let's put a tick and show that we are done with it. This 45,000. I'm gonna come here and say 45,000 for audit fees. Divide by. They say only half is paid. They paid the 50% of it. How much are we still owing? We're still owing the 50% of it. This 50 will cancel this 50. It is what? Get 45, 1, 2, 3. 45,000. Must go and record it under what? Under trade and other payable. Let's go and record it under trade and other payable. Trade and other payable, we're gonna add what? Plus 4, 5, 1, 2, 3, 45,000. Okay, we are done. Let's go to the second what? Second adjustment. The tenant occupied the part of the premises since 1 April 2024. We are renting a place since 1 April 2024. Means that we receive the rent income. Do you get me? We have given someone a chance to do what? To rent. So every month he's paying us a money. Do you get me? He has not paid. Okay, he started renting on 1 April 2024. Let's go to our. It is March, April. He started here. Do you get me? So he has not paid the rent for January and February. Let's go to our timeline. Rent for February, for January and February 2025, didn't pay. So rent was reduced by 10% on 1 September 2024. The rent was reduced by 10% on 1 September 2024. Let's come to our timeline. Here is March, April, May, June, July, August, September. Yeah, March, April, May, June, July, August, September. Or September is this. Here is our September, because we have what? March, April, May, June, July, August, September. On 1 September, the rent, it is reduced by what? By 10%. It means that here it was 100%, 100%, 100%, 100%, 100%. So here, since it is reduced by what? By 10%, it will be 90%, 90%, 90%, and 90%. Do you get me? So here it is still 90% and 90%. Why am I doing this? Because he is still owing us this amount. Do you get me? So let's calculate the percentage. The whole percentage from what? From April to what? To this point here. Because his last payment was on this point. It will be 100, 100, 200, 300, 400, 500. Do you get me? When I say 500 plus 90, 180, 270, 360 plus 360, what are we getting? It gives us what? 860. Do you get me? This 860 is percentage, just because I didn't put percent. It is a percentage, you see. So since it is a percentage, what are we going to do? On accounting, we say what we have what we have, divide by its percentage, multiply by what we want. Here we are also using the percentage of what we want. Do you get me? So what do we have here? We have a rent. They gave us a rent. The rent income, it is 107,500, 107,500, 107,500. Gonna come and say 107,500. This is what we have. It is the rent from this point to this point. So what is the percentage from this point to this point? It is this percent, 860. That's why what we are saying, each percentage multiply by want the rent for. Now what do we want? We want the rent from what? From January to February. What's the percentage from January to February? Is 90 plus 90, which give us what? 180. So when we punch our calculators, where's my calculator? When I say 107,500 divide by 860 multiply by what? By 180. It gives us 22,500. 22,500. This 22,500 is the amount that this person is owing us. That's why we're gonna go and record it under what? Under trade and other receivables. We still have there is still a possibility for us to receive this 22,500. Let's go and record it. 22,500. 22,500. 22,500. Gonna come and edit it. Trade and other receivable plus what? 22,500. Do you get me? So let's go. Okay, we are done with this adjustment. We are done with it. Yeah. So now we are going to adjustment number 3. Let me put this. Okay. Now we're going to adjustment number 3. Adjustment number 3 says what? A stock purchase of 13,000 was made on an account from Smith and Sons suppliers and recorded correctly. Do you get me? So they say 20% of the stock received was defective. The supplier acknowledged the error and issue a credit note, but no entry have been made yet. Do you get me? We have how much? We have 13,000 of stock. Do you get me? And then since we have 13,000 of stock, but the 20% of this 13,000 was defective. So 10% of 10,000 was defective, and we're owing what? We're owing this supplier a 13,000. When we owe him a 13,000, we find that 20% of this 13,000, or it is not what? It is not good. In other words, it is not good. So that's why we're gonna do, and we're gonna go and do what? And reduce the amount that we are owing him. Do you get me? Since we're gonna say 13,000, 1, 2, 3, multiply by what? By 20%, 20 over 100. We get what? Let me put a calculator. We got 2,600. This 2,600 is the amount that will reduce. It will reduce our what? It will reduce our what? The amount. It will reduce the amount. The amount that we were owing, because we are no longer going to pay this. We are no longer going to pay him 13,000. This 13,000 will be reduced by what? By 2,600, because 2,600 of the stock that he gave us was not good. That's why we said we weren't able to pay this 2,600. So let's go and reduce it to our payable. To another payable, 2,600. I'm gonna say minus what? Minus 2,600. Do you get me? So let's go. Here we come. We are done with this one. Let's do this. The physical stock count on 28 February 2025 revealed that the following: the trading stock at the end of our financial year was, it is what? 890,400. We have to compare this trading stock with which trading stock? With this one here. on the trial balance. We were expecting to have a trading stock of how much? Of 920. This 920. But since we're expecting to have a trading stock of 920, we didn't manage to have a trading stock of 920. Maybe they stole our stock. Now our stock, it is reduced to 890. Do you see? Let's find the difference between 920,000 minus what? 890,400, and go and subtract it. Since we have recorded that 920 on our answer book, let's go and subtract the difference. 920,000 minus 890,400. It is 29,600. Let's go and do what? It is 29,600. The stock that is missing. Yeah, in other words, let's go and record it. 29,600. I'm gonna come where we have what? Where we have inventory. We're gonna subtract what? 29,600. Do you get me? Why I'm subtracting this 29,600? We were expecting to have what? 920,000 stock, but we didn't manage to have that 920,000 of stock. And then we have 890,400. Means that the stock have been reduced. Oh, there are 29,600 stock that is missing. Do you get me? So okay, let's go. The stationery used for the financial year is 57,500. This one I explained it at the beginning. 57,500. 57,500. Here we come. We're gonna compare the stationery of 63,000. We're gonna say 63,000 minus what? The 57,500. And then when we say 63,250, let's come and write it. 63,250. 63,000 here under stationery. We're gonna say 63,250 minus what? Minus 57,500. Then we find the difference. 63,000 what? 250 minus 57,500. The difference is 5750. It is what our difference is 5750. Okay, I'm gonna write it here. I'm gonna write it in 5750. This 5750, it is now because at the beginning, you get me, we had the stationery of how much? We have a stationery of, okay, for example, we have a stationery of 7,000, and then we found that during the year we didn't use the whole 7,000. We used how much? We used a stationery of 5,000. The remaining stationery we're gonna treat it as our inventory. Do you get me? Of 2,000. I mean 2,000. We're gonna treat it as our inventory. That's why here our 5750 we're gonna go and add it on inventory. Let's go and add this amount under inventory. Let's go and add this amount under inventory. And let's go. Inventory. We're gonna come and add 5750 plus what? 5750. Do you get me? So okay, we are done with this that adjustment. Let's put a second. Let's so that you are done with it. Then they say a customer was owing us what? 3,700. Requested that the balance be transferred to his creditor's account, as he also supplies the business with the stationery. The customer was owing us 3,700, and since he is supplying us with a stationery, to get me, this amount that is owing us, he say he will not manage to pay it because we are also owing him, because he is our supplier. So this amount, he will do what? Will transfer this amount to his what? To the creditor's account. You see, let me make a practical example for you. You are owing your friend how much? You are owing your friend a 4 rand. Do you get me? When you owe your friend a 4 rand, and then you are owing your friend a 4 rand, your friend also owe you how much? he also owe you 7 rand. He also owe you 7 rand. Do you get me? What is the difference between this 4 and 7? It is 3. Okay, let's leave that. So your friend said that he will not manage to, because you are owing him a 4 rand, and he will not manage to do what? To pay you the whole 7 rand, because you are owing him a 4 rand. You are owing him a what? A 4 rand. He will not manage to pay you the whole what? 7 rand. Let me indicate here. Okay, this one you are owing your friend, and then this 7 rand, yeah, your friend is owing you. Your friend is owing you. I just want you to understand. Okay, here you are owing your friend a 4 rand. Your friend is owing you a 7 rand. This 7 rand. Okay, let make this a 14 rand. Okay, you're owing your friend a 14 rand. Your friend is owing you how much? 7 rand. And then your friend is saying the 7 rand that is owing you will not pay you anymore. You will go and subtract it where? On this man that you are owing him. You wanna say 14 rand that you are owing your friend minus that 7 rand that your friend say he won't able to pay you. That's what is happening here. This the customer who owes 3,700. He owes us 3,700, and they say you won't manage to pay the 3,700. Must go and subtract it where? To the amount that we are owing him. In other words, so we must go and subtract it where? On our trade receivable, because we are no longer going to receive this one. And then we also go in and subtract it where? On the trade and other payable. Why? Because we are reducing the amount that we are owing him. 3,700 must go, will come here, because no longer going to do what? To pay. It is no longer receivable. 3,700, we're subtracting it, so we're gonna come and subtract it where? Here. Where's other trade and other payable? Minus 3,700. We're subtracting here and trade and other payable, because we are reducing the amount that we are owing him, because yeah, we have transferred the balance. That's why I don't know whether I explain it very correctly, just because my English. Yeah, so we're done with that transaction. Then provision. Now we're going to wait. Provision for bad debt. Provision for bad debt must be adjusted to 4% of the outstanding trade debtors. Let's go and check our outstanding trade debtors. Debtors control 3. Debtors control 382,700. 382,700. Gonna come here and say 382 382,700. This is the amount of debtors debtors control. So since on this amount of debtors control, there was a 3,700 that was included. So we have to do what? We have to subtract it, because we are no longer going to do what? To receive that money. And then we multiply by what? By 4%. And we're gonna get the amount 382,700. 382,700 minus what? 3,700, and then also multiplied by 4%. We're gonna 15,160. We're gonna now our provision for bad debt is 15,160. We know that the provision for bad debt to always subtract it where? On trade and other, on our trade and other receivable, or on our debtors control to get our net trade debtors. Let's go and subtract it on the trade and other receivable. 15,160. 15,160. Gonna come and subtract it here. 15,160. Do you get me? So let's go. And then here the company has 2 directors who earn the same monthly fee. Or directors earn the same monthly fee. A third director who was appointed on 1 November 2024. They appointed a third director on 1 November 2024. Okay, it means that our directors now, we have 3 directors from 1 November 2024. the director earned 4,200 more per month than the other two directors, and he was paid until 31 March. Let's draw our timeline. Here we have this or March, April, May, June, July, August, September, October, November, December, January, February 2025, this March 2024. Okay, so the directors, we pay the directors an amount for what? An outstanding amount. Yeah, the amount we paid him more, because he received the amount from the 31 March 2025. Do you get me? So we appointed the new director on what? On November. I say March, April, May, June, July, August, September, October, November. Here, a new director was appointed. So, how many months this the how many months yo English? Okay. Okay, sorry. How many months? Yo English, guys. All right. How can I say it? Okay. Here we have what? 4,200. I'll ask you that question. Here we have 4,200, which is more than the one. More 4,200 more. We also have 4,200 more, 4,200 more. That is receiving. We also have 4,200 more. That is receiving. So here we come. Do you get me? The other directors, we had how many directors? Two directors. We had two directors for the whole year. Let me, yes, the first director, the second director. We had them for the whole year. They worked 12 months. They received their salary, their director's fees, and then the other one received the third director. We appointed him for how many months? We appointed him on 1 November 2024 here. So he worked for, or he received for a salary, a director's fee for how many months? For November, December, January, February, March, which is 1, 2, 3, 4, 5. Here we're gonna put what? We're gonna put 5. Do you get me? So when we add this amount, their month, we see that 12 plus 12 is what? 24. 24 plus what? It gives us what? 29. Do you get me? So 29. But before dividing with this 29, let's go and check our director's fee. That we have a director's fee where the director's fees is 930, 150. 930, 150. We have what? 930, 150. This 930, 150 include the what? The increment of what? Or it's not an increment. It include this 4,200, 4,200, 4,200, 4,200, 4,200. So we must make sure, or we must equalize their fees. You say we must equalize it. Do you get me? How are we going to equalize it? We're gonna subtract the what? Because this one is getting what? 4,200 every month. That is more than the what? The other directors. We're gonna subtract the 4,200. Subtract that 4,200. We multiply by the month that they received. You receive 4,200. 1, 2, 3, 4, 5. Multiply by 5. When we punch our calculator, we're gonna say what? 930, 150. 930, 150 minus what? 4,200 multiplied by 5. 4,200 multiplied by what? Multiplied by 5. Okay, it give us what? It give us 99,150. Do you get me? So now this amount, we have equalized it. You see, in other words, we were making the amount that this one is receiving to be equal to the other directors. You see, so let's divide it by what we said. What we have divide by its percentage. We're gonna divide this one, divide by, oh sorry. Okay, we're gonna divide it by what? We're gonna divide it by 29. we divide it by 29 and see how much do they receive, the equal amount that they were able to receive. 920 divided by what? By 29. It's that it is 31,350. We get what? 31,350. You see. So since all of them, isn't it that we equalize the amount and then each one is getting 31,350? So we're gonna add, since we want this amount here, we're gonna add this 4,200 plus 4,200 because we have deducted it at first. I'm gonna say this amount plus 4,200. We find what? We find 35550. Yeah, 35550. Yeah, 35550. So this 35550, where it is for 31 March, so it is receivable to us, you see, because we have paid them more. 35550. Gonna come here to receivables and add this 3550. 3 plus 35550. Do you get me? I don't know whether you understood or not. So here, let's do this. The company repurchased 30 shares. You get me? At the price of, this is our repurchase price, on 26 February 2025. The repurchased amount in the retained income amounted to what? To 3. This is what, and the retained income, we're using the what? The above average. This is the above average. This share qualify for the final dividends. We did what? Let me explain it here. But it needs a space, a huge space. Yeah, let me explain it here. Okay. Now, this, the amount they say it qualifies for what? It qualifies for the dividends on it. So it means that since we have our shareholders for dividends, we have to calculate it. So we know that on what? On ordinary share capital, we have here we have shares. Then here we are putting the amount here, yeah, in rent. Here is our timeline. I don't know whether you're gonna understand or not, but I'm trying. 1 2 3 4 5 6 7 8 9 10 11 12. Do you get me? We don't know our what? Our issued at the beginning, and then we don't know our during, our issued during there, issued during, and then that issued at the beginning plus during, and then we're gonna subtract what? We will subtract what? We're gonna subtract the repurchase. Yes, our repurchase. Then here is our repurchase in rand. We're gonna subtract it. So we have what? Issued at the end. Issued at end. Since we have issued at the end, where here, we know that we're gonna say this one plus this one, issued at the beginning plus issued during, minus repurchase, and get what? Your shares of issues at the end. Your shares issued at end. Okay. Yo, carry. Okay, here we're gonna have the rand of shares issued at end. Do you see? Let me do it like this, like this, like this. Do you get me? If your repurchase, it is what? It is near your what? Your issued at the end, like this. There is no space between the repurchase and issued near at the end. The amount or the rand that we're gonna use, if we use 7 rand here, we're gonna multiply by 7 rand here. The amount, yeah, it is the same. You see, since we know that the repurchase price, it is above average plus average price equals to repurchase price. So We use this above average where in retain income. We use this average price in ordinary share capital, repurchase price in cash flow. Do you get me? So here they use the what? A average price. The average price. Ne? So no, the average price minus the above average, or average price minus the repurchase price, we're gonna get above average, and above average minus repurchase price, we're gonna get the average price. So let's first get the average price of shares. Yeah, they say okay. This 30,000 is for shares, and then 310. Okay, let's take this what to get the above average. To get above average, we're gonna take what this amount of the above average, the amount 3 is sorry, it is 3, 1, 2, 3, and divide it by what? Divide it by this 30,000 of shares. Then we get the above average price of what? Of 1,1. And then let's come here and record it. We have an above average of what? Of 1,1 plus the average price. We don't have it. Average price, we don't have it, and then it is equal to what? The repurchase price is 3,1. You're gonna say what? 3,1 minus what? 1,1 to get the what? The average price. And then our average price, it will be what? It will be 2. Average price will be equal to, where can I put here? I'm gonna say average price equal to what? To 2 rand. Do you get me? So here we come. Now they gave us the what? The money for here. I'm gonna go and check it where? On our trial balance. They gave us the amount of, they said the amount is accounting guys. Okay, ordinary share capital, it is 1,189,000. 1,189,000. 1 million. Here we have what? Let me use another. Let me use a black one. 1,189,000. Do you get me? And then we know that since our average price, it is 2 rand. This was an example. Our average price is 2 rand. That our issued price at the end will be what? Will be 2 rand. So we can able to get what? To get these shares here. Do you get me? I'm gonna say this amount divide by what? By 2. Because when we want the amount here, we say shares multiply by 2 and get this. So now we're gonna say this divide by 2 and get the shares here. And say 1,189,123 divide by 2. Get that it is what? It is 5,954,500. And then on this amount we subtracted the what? We subtracted the shares for the repurchase shares. So they say the repurchase shares qualify for what? For the dividends. We're gonna say what? This amount 594,500. We add it with what? With that 30 shares of repurchase. Here we have 30 shares here. The repurchase of shares 31, 2, 3. We are adding the amount, and then we get it that it is answer plus 31, 2, 3. It is 624,500. So now we have the shares. We're gonna take these shares and multiply it with what? We're gonna multiply it with this 30 cents and see our shareholders for dividends. I'm gonna come here and multiply with what? 30 cents. We know that 30 cents is 30 over 100. Then we get what? And so multiply by 30 all over 100. Get 187,350. Yo, muntu khathele. Here we get what? 350. So let's go and record it. This is our share. Holders for dividends 187,350. This is what? 187,350. Okay, let's show them the workings. We're gonna take the imported amount. We're gonna say, isn't it that we know that we multiply 624 500, we multiply by 30 all over what? All over 100. Yeah, then here's the amount. So let's go. I want to show you something. Since here we used how much we used this man from our bank to do what? To purchase shares. We say 3. Let's see how much did we use. We're gonna say 30,000 multiplied by this amount. Let me write it here. When I say 30, 1, 2, 3 multiplied by what? By 3,10. And see how much did we take to in our bank? 3,10. We took 93,000 to repurchase shares, to buy shares again, to buy back shares. 3,000. We used 93,000. This 93,000 must go and do what? And subtract it and add it here on bank overdraft. You see, and because it is increasing our what? Escalate. Ikhuphula escalate. Like so escalate that's why you see. So here, let's go. We are done. I'm gonna straight on. So okay, this one we are done with it. Okay, the following financial indicators were calculated on 28 February 2025. They calculated the following indicators 28 February 2025. After all adjustments were processed, they say after all adjustment, this adjustment that they gave us here were processed, and then they calculated and gave us this. This operating profit on sales, it won't help us here on statement of financial position. It will help us on statement of profit or loss. Debt equity ratio. Know that when we want to calculate the debt equity ratio, you do what? It will help. Okay. Zero. We say non-current when we want to calculate your debt equity ratio. Say non-current liability. Non-current liability is to what? Shareholders equity. Shareholders equity is for what? Is for debt equity ratio. So okay, let's go. The loan from King. Okay. Sorry. Let's calculate it. You see, I'm now fast. Our non-current liability, we don't know it, ne? But we have our what? Our shareholders equity. Let's go and took our shareholders equity. Our shareholders equity is what? They gave us here. Shareholders equity is 2,069,000. 2,069,000. We're gonna say what? 2,069,000. What is the percent? We know that in accounting use what we have over its percentage. What's the percentage of shareholders equity? It is 1. I'm gonna say all over 1, all over its percentage. Multiply by what do we want? We want the non-current liability. Our non-current liability is what? Is 0.5. We're gonna multiply it with 0.5. Then how much are we getting? I'm gonna say 2,069,123 divide by 1 multiply by 0.5. Get this 1,034,500. 1,034,500. Gonna come and show the workings here. Maybe we're gonna earn part marks. Non-current liability. We said what? 2,069,123 multiplied by what? 0.5, and then we divided by 1, but it's the same. When divided by 1, nothing is changing. Then you will find 0.34,500. This 10,034,500. You know that it is the same as what? As our loan here, long-term loan. I'm gonna say what? 10,034,500. Why I'm saying it is the same as our loan? Because if we have our loan here, we're gonna say this amount, we're gonna take it and put it here. That's why I'm saying that it is the same as the amount of loan. Guys, daughter, Sinaheta, the loan from King. Okay, let's circle it. Then they said the loan from King Bank will be reduced by a capital portion of 21,500 per month in 2025 financial year. This is our short term loan. We're gonna multiply because they say per month. We're gonna multiply it with what? With 12 and put it on the short term loan. 21,500 multiplied by 12. Where do we have our short term loan here? 21,500 multiplied by 12. What do we get? 21,500 multiplied by 12. You will get what? You will get 258,123. You see, do you get me? So I think we are done with our adjustment. Yeah, we're done. Let's circle it. Show it that we're done. So now it's time to do what? To totalize. Let's totalize. Bank overdraft. Let's start here at the bottom. We're gonna close the brackets and punch our calculators. 10,900 minus 5,100 plus this, we get what? We get 138,800. Do you get me? So here we have the amount. We've already totalized, and then SaaS income, we didn't have an adjustment for that one. We're gonna say 3,200. Do you get me? And then short term loan, we have the total. Let's totalize this one. When we punch our calculator, we get what? Excuse me. Okay, we get 261,850. 261,850. Yeah? Current liability, we're gonna add all this amount. And then when we add all the amount, we find that our current liability is what? It is 879,200. Do you get me? So let's for the okay. Yeah, we are done. So let's add this one. Let's try down. Okay, this one plus this one minus this one minus this one, find that we get, let me punch a calculator, don't worry. We get what? We get 421,890. This one is 421, excuse, 421,890. Do you get me, guys? I hope swa twisiseka. Okay, let's proceed. We're gonna add here. I'm gonna say this one minus this one plus this one. We get what? We get 896,150. Yeah, now we are done. Please don't forget to subscribe. I will still upload more videos. You get me? Yeah. Next time I will improve my English. I promise you. Hey, just because my English, yeah, it is very difficult. I'm a Tsonga, you know. So this all our workings. I think we're gonna. I don't think I know we're gonna get 26 over 26 because it was out of 26. So guys, now, if you have a problem with accounting, please don't be afraid to text me on this number, or just leave a comment, to be simple, or text me on this number. Danko, God bless you on your examination.